Марконі. Марконі.
Testing, testing.
Маркони. Маркони.
All right, thank you all for taking your time to come in again this week. I'm going to go in and get into our review for the banking side to the trust. So I'll get into our review in just a moment for the banking side of the trust. This one is a little bit more difficult to understand because we've been trained throughout our life to do things a certain way with which we say banks or with money. So I'll be able to break that down a little bit to kind of pick our brains to show you how I was taught about banking. But then my whole entire life changed once I started college in 2003. When I started college at that time, I had learned about a class that had put me into something that I didn't realize. The class I took at that time, which was a mistake, but ended up being the best mistake of my entire life. It was called Money in Banking. And once I was in this class, I was like, why am I in this class? First off, this class was not supposed to be given to me. It wasn't even on my curriculum. But I learned by barely passing this class everything that was needed to know about banking and how the whole system operates off of, on the most simple part, someone always having access to a bank. So if you don't have a bank, then it's almost as if you have no way to access any money. So the money is not even just always about money. It's always more about how you can get access to the funds pretty much all the time that you choose to get access to it, right? So now we know that that goes right into banking. And a lot of the times we get confused with a trust. We think that the trust account is a um, this high level thing that can be, without dealing with banks, right? So you can have a trust, you can operate at all times without a bank, like I did for years. I learned how to just use cash. I learned how to just use the post office, and I learned how to just use prepaid debit cards. So that is a way you can live. I mean, there's nothing, you know, wrong with that, but there's people that don't even know how to do that. So that's the most basic part of a trust. Like I say, if I had my revocable trust when I first got into it back in 2016, I wasn't using any banks. Matter of fact, I couldn't because I couldn't get approved because a lot of these banks had my name flagged. So I learned that life a long time, like how I had to learn how to live without a bank. So when I started to live like that, I realized it wasn't even that. It wasn't even that. It was more of me not realizing that I needed to create my own bank. And then by creating this bank, this allowed me to start learning how to do my own business because I can't even start a business without even learning how to start my bank. So I went into this layer to try to learn this. This was back, as I said, I took a class back in 2003, and I didn't know it stuck with me all throughout that time because I was like, why am I doing this? This is has nothing to do with anything, right? But in the future, it did. So 10 years later, I ended up having to use that knowledge that they say you don't use your knowledge in school. Yes, you do. At some point in your life, you will end up using the knowledge that you learned in school. It's almost a joke. The goal is to keep you away from school as much as possible so you don't have the knowledge later on anyway. So that is also another thing that they do to you is to keep you away from your knowledge of your education, which I'll get into for a moment, which is your bank. So at the end of the day, a lot of people still don't know that you're a bank and you're supposed to be operating your own bank. And that's your first business. And there's no way around this. Right. So at the end of the day, that's what I learned as I got out and started to see where most of my money was going. So I started to see the game, how to use the trust without a bank that we always say. And all I can do is use cash, prepaid debit cards, and money orders. And there's people who live this life right now because their name probably flagged by check systems or all these other places. They say if you try to open up a bank account, you may owe them some money. So we understand that layer of where people already live in that life where they owe some money to the bank. So our game is to get around that and to stop trying to basically owe money to the bank and even put your money in their bank that way. You want to be able to become your own bank. And that's what I'll be able to go into talk about today in more details and make sure that we know how that looks and what that is. And everything I'm saying, I'm already doing it and I've already done it. And it's something that's already been accomplished for a long time. It's not something that we have to try to figure out. So we're not here trying to give you all anything that we're trying to figure out, or we've simply trying to figure out how to test it out and see if it works. No, we're past that point. We've been past that. The thing that we're dealing with now is how to deal with receiving funds in the bank. That's going to be the hardest part a lot of you all are going to deal with because you're still not thinking about how this works. And I'm going to go through this today and pick y'all brain and explain this and make sure we understand it thoroughly. Because this could be the problem where after you get your revocable living trust, you really never had to go, in which we say, go and just hurry up and open up a bank account. It never really was a required option. So we're going to get into that because that is the hardest thing that we all try to see. Well, what's next? Well, how am I going to operate? Well, you have to operate by learning how I did. I had to do the same things. I had to figure this out. And what happened was, after a while, I realized that I still never needed to open up a bank. And most of this stuff was like a personal bank account situation. So that was my story as I went into this and I started to understand the side that I needed to be on. And that main side was the sole proprietor. All right. So the minute that I started to think about the sole proprietor, that was the only thing that I can do. If I were ever to deal with a bank, talk to a bank, communicate, have money with the bank, and so on, I'm doing it as a sole proprietor. And not only that, it's in my social security number. So the social security number was the whole situation that started everything once I talked to the bank anyway. So when I was 18, 19, 20, 21, 22, whatever year that was that we opened our first bank account up, I didn't open it up as a sole proprietor. I opened it up as a regular old personal bank account. That's what happened to a lot of us. That's what most of all the people in America have done. We've all decided to open up a bank account on the personal side. That's why it's taking so long. And some of us may have money still sitting some places. We still trying to move that money. Or we got people that ain't gonna move it at all because this is their mind. Their mind is saying this is the money. So we're gonna get into this and explain this thoroughly as best as I can. As I always do, I try to show you all screens, diagrams, pictures, so that you can truly understand how we can get through all this. So let's go back to my announcement that we had just a moment ago. Let's see if I can pull. Here we go. All right, so this is part of the announcements that we have for today. The whole point of the announcement was going to be a line of credit, 250,000, which we actually updated it to 251,000. 251,000 using a social security number as a sole proprietor bank. Right, so we're being very specific so people aren't confused. We never said using an EIN. Right, so all those people who are still using your EIN saying that I got the sole proprietor and I got approved and it's in the EIN, you are not on the correct path. That path is not the path we're speaking of today. So the EIN of a sole proprietor is not the same as a sole proprietor account in your social security number. So everybody around you has to do this. It doesn't matter if they don't understand. My wife had to do it. She didn't understand. So guess what? My wife got her social security number. We went over to the same bank and she got an account. Do she understand everything? No. She don't have to. All she needs to know is she has her sole proprietor bank account. You don't have to break it down. Let the bank break it down. That's probably our issue. We're trying to talk to family members, people around us, trying to break it down. There's nothing to break down. It's already there at the bank. Obviously, if it wasn't an option, then you would not have been able to do it. It's just most of us are seeing this from the personal side. So the sole proprietor is the sole, the SOLE, as we went into these layers a long time ago and talking about how the SOLE is always going to be the trustee. So that's why this is a trust. So when people say the trust, this is a trust. That's right. The sole proprietor is a trust. So why do I need to operate sole? Because if you don't operate sole, then you can't operate trust. You can't operate as a trustee. And we get into the nitty gritties because we know the revocable living trust documentations are also required. We need you all to master those. But even more, after you master those documents, you have to master yourself because we could be in the way. It could be us. We could be the problem with the trust. There ain't nothing wrong with the trust. It could be us, right? The trust doesn't change. The trust has never changed. The name, the numbers, the words written on the papers, they are never going to change. But it's us. We have to change. We have to change the way we think. We have to change the way we're doing things on a weekly basis. We got to change the way we're hearing other people tell us to operate our own business. How you gonna have somebody else come and tell you how to operate you? It's like, why are you listening to all these other people? I listen to no one. I don't have to go learn under nobody to learn about trust. I didn't learn any magic guru that gave me all this knowledge. All I did was read. I just read what the IRS says and I applied the information exactly what the IRS said. I didn't have to go study any gurus. We say gurus on purpose because you all may not think they are, but that's how they are seen. So this isn't a journey that is difficult. This is just a self journey for you to learn about how you can operate yourself. You don't have to have other people show you how to do all that. Most of the time you can do all this stuff yourself. All right, so let me see. Why can't I get to that share? Oh. All right, so what do you do to operate? What are you going to do to operate the soul? You're going to need to create a portfolio, and that is a portfolio that will receive more than what the FDIC is telling you to receive. Right, so you would need to receive more than what the FDIC insured coverage at most banks tell you that you can have up to. Right, so you have to learn this technique of securitization. And we've told you all how to do this in other videos in the past, but I'll go through it again and show how that works because it may have escaped us. Why can't I keep seeing this screen? There we go. All right, so when you create this portfolio at the banks that you're going to be going in as a sole proprietor, you're going to the bank on the sole proprietor side. That's why this is totally different. You have to think about talking to the bank always as a sole proprietor. That's a misspell right there. It's not SOUL. It's supposed to be SOLE. So $300,000 or more in a line of credit for a SOLE proprietor and your social security number. Why are we saying $300,000? Because now this forces your mind to stop thinking that all you was trying to grab was just that money that you needed to pay your bill. Like if it's more, if you need to get more money, then this is the number that you need to start at. So everybody who has a trust, this is instantly the number that you're supposed to start at. $300,000 or more. So some of us are going to be on this for a while because we're still trying to grab just like 25,000, trying to just grab 5,000, 10,000, 50,000. That's not enough. You're supposed to be thinking about $300,000 or more every week. Now, if you're not thinking about getting $300,000 or more every week, then they're going to always think of y'all on the personal side. There's no way to get you out for that personal side. That's why I said you will need to create a portfolio that will receive more than the FDIC insured coverage. So this gets a little bit deeper when y'all start saying that I'm using my trust. So I know you're using your trust, but I want to know if you really, really are using your trust. Because I actually have to prove this to you guys. Like if I don't show my screens, or I don't show what I got going on, then, you know, none of this stuff looks. But if you got to show what you got going on as well. So the banks and the system has to see it. They're going to be like, hey, we don't see anything showing that you're trying to get more money. In our minds, we say money is the line of credit. At this point, if you all are still trying to grab treasury checks and Federal Reserve notes, you are still behind. You're so far behind. And I've been trying to get you guys ahead for like 2, 3 years. But if you're still sitting back waiting on the treasury check, you will be waiting for a very long time. And I'm going to go through some more information in the next few weeks or so after tax season. I'm going to start revealing more information that I've been holding out from last year to show you what Trump is about to do. And we'll get into more details of how you all should have never been waiting on the treasury check. Right? If you're still waiting on the trust treasury check, right? So you should be focusing on the line of credits. Where's your line of credit? Right? Are we using our, and we're going to get into the next parts to show why you should be using your social security number at the bank the whole time, trying to get access to those trust credits that's on that social security number. But you all keep getting bamboozled to use the EINs, all these other EINs and LLC EINs and S Corp EINs and partnership EINs and sole proprietor EINs, all these other EINs. Right? It doesn't matter if we got a guy who said they can grab $250,000. That's all to keep you far away from your trust and your sole proprietor. So yes, your sole proprietor should have $300,000. That's your goal. So everybody here should have a goal of $300,000 or more in a line of credit for your sole proprietor on your social security number. Next, to prove that you're doing this, you're gonna have 2 years of tax returns with Schedule C. We're getting. Let me get back to the FDIC thing because I may have to sync that in with you all a little bit more. Let's go straight to the FDIC insurance. So I just typed it in Microsoft Bing Copilot so you all can search this out yourself. FDIC means Federal Deposit Insurance Corporation. So this is a corporation as well that insures up to a certain amount. They've been around since 1933, similar to the time they say HJR 192, which a lot of these other places talk about HJR 92, which we understand that the corporation is bankrupt and there is no money. Okay, we got that, right? But they still are able to lend credit. So they have access to credit. And the FDIC, the Federal Deposit Insurance Corporation, is an independent agency of the United States government. So they're independent of the United States. It protects and reimburses your deposits up to 250,000. There we go. So that means that if you're under the 250,000 threshold, they will help you as long as you're on the personal side. So this is on the personal side. We know that if it's only less than 250,000, then you're on the personal side. If your FDIC insurance bank fails, right? So if your bank fails, this is what happens. You get up to 250,000. FDIC insurance is backed by full faith and credit of the United States government. The maximum insurable amount is currently 250,000 per depositor per bank. All right, so this breaks down in more details. If you want to go straight to their website, you can because we want to keep it so transparent that you all can know what this means and what this is and what's not covered because you gotta see this from the perspective that the bank is seeing you. All right, so if you're a banker, that's what we're going to be talking about you becoming today. You becoming a banker. All right, so you make sure that when you begin to get money inside your bank, you begin to know how much funds that you can hold inside your bank. I'm just scrolling through this to show you all that this is something that has always been around. This is real time for you all to look into the FDIC, Federal Deposit Insurance Company. They say the FDIC insured, because that's where y'all keeping all your money at. But remember, if it's over 250,000, if y'all have cash inside your bank account, they can't insure it. All right. That means that if it's over 250,000, that means it is not covered. So we're not here to keep you all in mystery of what's going on with how the money works. Next, we have this part where I'll show the tax returns right here. The 2 years of tax returns. So this is where the bank is always asking you for these 2 years. That's why we kept saying you got to get through the revocable trust course. The revocable trust course is something you have to take over and over every year because you always have to file your taxes. So you need your last 2 years of your tax return with your Schedule C. It has to prove that you're doing business through your trust. Now, if you're still doing business on the personal side, you're going to put more of your focus on the W-2s and your 1099s that you receive from your employers. This is why I keep saying this. Like, you can't say that it's not working because you're not working it. So the reason you're not working it is because you're not thinking about it in the way that you're supposed to think of. Like I just said, are you thinking about grabbing $300,000? Or are you just thinking about grabbing $10,000 real quick? All right, so we're not here to just grab $10,000 or $5,000 or even 30,000 so we can just pay our bills. You should be thinking about how I can ultimately pay off all my bills, have more money, and invest more cash or money and credit into my business. That's what we're here to talk about. So when you have your 2 years of your tax returns with Schedule C, also showing on your tax transcripts. There we go. We got you all with the tax transcripts. So that means it should show on the tax transcripts. So you may not even have to, go through all that trouble. You can just log in online and it'll show up on the tax transcripts. Next, as you bring these tax returns to your bank, because that's what you're doing, right? Because you want to get over $300,000. What are you doing with your taxes? Well, you're taking your tax returns to the bank. You want to take it to the bank. Those are your financial statements. You don't have to do a UCC. The tax return is higher than the UCC. That's right. The tax return is higher than the UCC. If anybody wants to get caught into that thing, right? The UCC, Uniform Commercial Code. Right? That's what banks use. Banks use that because of assets or collateral. But your tax returns can also be used as collateral or a financial statement. So you have a shareholder relationship with a business commercial side of your bank. That's right. So are you always talking to the commercial side of your bank? Or are you all still dealing with the personal credit, which we say we know you're talking to the personal side if you all are paying off any personal loans, even if it's at Navy Federal, because we already told you all that Navy Federal keeps the personal side open in order for you to do the business side. So we're saying you should always be talking always to the business commercial side of your bank because you get a shareholder relationship with the business commercial side of your bank. So if you're having issues with that, get a credit union that helps you with businesses more. Focus on credit unions that help you with businesses. A lot of these places that you go into, Bank of America is a good bank when it deals with business, but you got to know how to work Bank of America. Some of you all are not working Bank of America the way you need to work them. Chase Bank is another one that you got to know how to work them. So everybody, you have to have a relationship with these business partners. These are your business partners, right? You're a banker now. So if you're acting like a banker, now you have moved to operate your bank. And that's the business commercial side of your bank. Next, as you begin to operate and see the business commercial side of your bank, You should be able to access to see your Dunn's number, which is also a Paydex score. So you should be able to see a Paydex score of your social security number. Very important. That is not an EIN. And I said this very clearly. I said that your Paydex score and Dunn's number that is connected to your social security number. That's correct. There is a Dunn's number and Paydex score that is connected to your social security number. Now, you all are seeing this because I'm saying this way because we have to make sure that we stay out of the corporation when you're doing this first. Now, I got to show the screens of this because, I can tell you it exists, but I'm going to show you the examples of what it looks like as you go. So let me see if I can find an example of the Dunn's number, or if anybody has access to the Dunn's and Bradstreet. Anybody looked up this information on there? So you want to look at the credit on the Dunn's number side of Dunn's and Bradstreet. So when I look up your name as a sole proprietor, you should pop up. Anybody have ever done this for yourself before? Have you ever looked up your name and your social to see if you pop up? But you don't have to look up your social. I think you just look up your name. Let me see if I can find how to look up. Here we go, business directory. Click on that. And when you go to business directory, you should be able to just type in your name. Now, if your name doesn't pop up, this means that you're not on the business side. You have not activated your sole proprietor. This is what we're here for. We're not here to make it look like you have a whole bunch of documents and nothing's showing up in the system. All of us, you're supposed to think of this. This is a corporation, right? The birth certificate was already done. You can't get out of the birth certificate. So all these people selling y'all getting out the birth certificate it's never gonna happen. So just get that out your mind. You're not gonna get out the birth certificate. You need to capture and use it. That's why we say that you should be a business by now. Stop waiting on someone to give you a handout, such as some money. Nobody's going to give you any money. This is very important that we start to see this because a lot of us have been sitting here for years and you're not looking up yourself as a business. Why are you not looking up your business side of yourself? I'm going to look myself up. Don't look at me because I can find my stuff. So I already know I'm going to use myself as the example, but I just want you all to do the same for yourself. All right, look at that. And I pop up. Not only do I pop up, my trust pops up as well. Very interesting. Right? I mean, I can prove this. Do I need to prove it? As in saying that I have to have it? Yeah, you have to prove yourself. Everybody's hiding you. It's not private. This isn't private. We got people that say, "Well, I don't have to. I have to tell you that it's private." What are you talking about? This is why this is important because you all are just sitting back and yeah, I can look up my credit report for myself. That's right. The whole thing is very simple once we begin to simplify the process for ourselves, but not going into other ways that people are trying to tell us and sell us to do. That's why there's only one way to do this. All right. So as you go on, you begin to look into your information and you can see that you should be able to pop up on the Dunn's and Bradstreet. That's one of our layers. But also, I'm going to give you all another one. Let's go to Experian. Experian business. That's to prove to you that there is a business side. I know we went over this a little bit, some of us in our past studies, some of you all was able to look into the Experian side of business reports. So yes, Experian does do business credit reports as well, of looking you up. That means that your social security number has a business side. Okay. Now there is a way to look up your, let's see, business services. All right, so here we go. So get your business credit report. Doesn't say get your personal. It says get your business credit report. And what you do, you should be able to type your name here as well. Your name should be able to be seen as a business. Let me see if I can type in and see if my name pops up here. This would be my company. See? Wow, look at that. I got plenty. There's a lot of things popping up. Wow. So we got few things popping up here as a business. But this is the details of showing how you should see yourself in the system somewhere on the business side. So I see that my name is showing up in the business side here a few places. Not only do you have Experian, you also have Equifax and TransUnion. But I'm not going to go through all those in detail this week. I just wanted to prove to show how that works when you're looking at our outline right here where I'm talking about access to see your Dunn's number, right? Access to see your score. They call it a Paydex score in some of the platform. I think the Paydex score is Dunn's in other companies. So any comments or questions on this so far? I just want to make sure we're able to thoroughly go through the information that you're doing as a banker and you're actually looking up yourself as a bank, right? You know, you're the bank and you're actually playing the banker. And last, I'm going to show you all this next one, this last, as I go through these next points right here, we're going to show how you're also supposed to play the broker. That's right. There are no brokers that you're supposed to allow to broker for you. All right. So next is a secured line of credit on the business side of your social security number. That's very important. That I have a lot of people still having issues with that. Whatever it takes, figure it out. Like every day that you wake up, you should be thinking about how I can do this. But if you forgot and you're not doing it, then that means you're never going to be secure. You're just sitting back thinking that I got some documents and that's all I needed to do is notarize a document and turn it in and I'm good. It's just not going to work. So I just want to make sure we all see the reality of this. We're making it so plain that it's not complicated, right? So how you a secured party, but you don't have no secured credit? Makes no sense. Makes no sense, right? So how could you be secured? You have to have a secured line of credit. And some of us going to say, well, they keep denying me, Brother Wallace and Brother Rock. They denied me. Right? We're going to always try to say outside of self, this is why. This is why this isn't happening because someone outside of me is stopping me and telling me that I can't do it. So now you can't do your business. Now you can't even work on the business side of your own social. It's your social security number. So we're not changing the numbers. All right. So once you secure yourself, then you can start getting some credit on the trust EINs. All right. We're not jumping y'all to the trust EINs because we know you ain't even doing your social. So if you can't even secure your social, we know you can't secure the trust. This is not just a document game. You can sit on it all year. I've seen people sit on this stuff for 5 years. 5 years. Still don't have no secure credit. Sitting around with documents. It's not going to get you nowhere. Waiting on the IRS. They still sending me this letter saying, give us another 60 days. Give us another year. All right, you're going to sit there and wait on the IRS. Go ahead. That's the corporation. I already told you. I broke this down. Y'all want to sit back, wait for the IRS. That's another corporation. But in the meantime, you should be securing your line of credit on the business side of your social security number. You're already using cash. You're already paying bills. You might as well secure at least $300, right? 300, 400, $500, something. It's very basic. Like you all are already using all this money. You got to be paying for something. So why don't you just pay with that secured line of credit? That's all that breaks down to whenever we talk about having a secure line of credit on your social security number. But this time you want to make sure that it's on the sole proprietor side, which is the business or the commercial side, whichever they want to say that is at the bank. So this can be fleeting and it can still be difficult even after what I just said. And even after you go to a bank and they still going to get you because they're going to be confused because when you go there, if you're confused, they're going to be confused, right? That's how that works. So if you're confused, they're confused. So don't go in there confused. You should know what you're talking about. You should say exactly the right words. You should know what to do. And you should sometimes do your research online before you walk in. All right, so just try not to go in there asking questions and getting answers to be steered away into the wrong direction. All right, so let me go back over that just to make sure we've made it known of how this is getting you to this point, right? So if you're getting to this point where you can still accept that you're looking to have more than $300,000, because I can't get you to the millions because the trust is about the multimillionaire, which you're going to get into that later on in our discussion. I'll show you how once you get this part down, then you can get into the multimillionaire. And we're not saying just $1 million, we said multi. Because if you're thinking just such a small amount of money, which we keep saying, you can't be on this trust side. Anything dealing with the 1041, with the estates and the trust, is about money or lines of credit that are over $251,000. Now, if you're still dealing with $10,000, $5,000, $2,000, this is this doesn't even require a bank. This is we're gonna just sit there and tell you this. You shouldn't even be focusing on opening up a bank account. All right, once you're ready to open up, once you're ready to get $50,000, then we say y'all should be focusing on opening up that bank account. And I mean cash. I'm not talking about trying to go grab a line, you're trying to go apply for some credit, and then you're ready. No, we're saying your mind has to be ready for this. Right, are you ready for at least $50,000? Right? $50,000. This is where this starts, where you want to begin to open up your bank account and become a partner or shareholder relationship with a business or a bank. Now, if you're not ready for 50,000, then you all should not be focusing on trying to deal with these banks, at least right now. Wait about a year or two, like I did. I gave y'all my story when I first got into the trust. I didn't have a bank. It took me about 3 to 5, almost 5 years. I had no bank. It was just prepaid debit card, cash, money orders, Cash App. Right? Some of y'all live off Cash App right now, so you can't live that life. There's people who live off Cash App. That's what I'm saying right now. All you need is that card, right? As long as you can pay your bills, get some gas, go to Family Dollar, Walmart, grocery store, you straight. But we're not trying to live life like that if you're dealing with a trust, right? Or an estate, because this is getting you to the multi-million-dollar operation eventually, right? So I know who I'm talking to. I'm just trying to make sure we all here to explain this rightly to other people so that you're not bringing them upon something that they themselves may not be ready for. All right, so let's get into a little bit more of a diagram to show like what am I saying? What do you mean, Brother Wallace? Like, Brother Rod, why are you talking about think about more money? Now, this is what they say. They call these things high net worth individuals. Have you all ever seen that before? High net worth individuals. Let me see if I can find that for you all. Yeah, it's a term. And they have high net worth individuals all over the planet. It's a very known term. As I say, it's a banker's term. So you all are bankers now, right? So just walk with me if you're just now new to this. So being a banker, you instantly are starting to think of yourself as this. All right. If you're not thinking that you're this, then you have to work on this eventually if you're going to keep using that trust. Let's let me go here. So let me go through some of these details because I know it can seem very fleeting to us, but this is the way the world has worked, whether you realize it worked like this or not. It says in the financial service industries, a high net worth individual, HNWI, is a person who maintains liquid assets. Liquid assets. That means cash value. That means I can see the balance in my bank account, right? And I can move the money. That's what that means. Liquidity. We're not talking about promissory notes, credit cards, things like that. Those are not totally liquid. Liquid assets at or above a certain threshold. Typically, the criterion is that a person's financial assets, excluding their primary residence, are valued over what? $1 million. There we go. So this is how the United States of America and the world already sees this. A millionaire, right? A individual whose net or wealth is equal or exceeds 1 million units of currency. Depending on the currency, a certain level of prestige is associated with being a millionaire. Many national currencies have or have had at various times a low unit value, in some cases due to past inflation. So a second level is a very high net worth individual. That's VHNWI. Is someone with a net worth of at least 5 million. Right? So as you can see, it's getting there. You see the level thresholds, the way they're seeing it in the asset world. So you got your 1 million. Next, you got your 5 million, very high net worth. And then we got your third level, the terminal level on an ultra high net worth individual. So that's UHNWI, holds 30 million in investable assets. Individuals with a net worth of over 1 billion are considered to occupy a special bracket of the UHNWI. So right, they're looking at those as ultra high net worth individuals. Once you hit 30 million, you're considered an ultra high net worth individual. These thresholds are broadly used in studies of wealth, inequality, government regulation, investment suitability, requirements, marketing, financing standards, and general corporate strategy. Okay, so I'm going to stop right there from that reading. Just wanted to show you all just going into some of these layers of high net worth, right? So that is what your goal is. Time is coming, is looking at a high net worth of your bank. All right, so what you're going to do today, I'm going to go through an exercise and show you all how to do this. You're going to learn how to use yourself as the lender, right? You're going to use yourself as the lender. Remember, you're no longer the borrower. You're now the lender. You can no longer be the borrower. Remember, the borrower is servant to the lender. That's what it says in the good book. The good book tells us this, that the borrower is servant or slave to the lender. And it goes right into our biblical principles of showing you how money is the answer to all things. We actually found out a few more biblical principles as we found in Ecclesiastes chapter 10, somewhere. I think it was 10:24, somewhere. Let me see if I can find it again for you all. As we understand that money is the answer to all things. Ecclesiastes 10, here we go. I don't know if it's 10. But there's interesting things that we're finding out more as we look into the biblical principles that they're applying more to money and wealth more than we've ever known. Had not never thought of the Bible like that ever. I was thinking of it just more of religion and going to church and just only specific one thing. But now that we see this as being used, that they're using in the courts and the banks that we talked about in one of our calls, we learned that they're using these courts and banks principles for money. This is how they're doing this to us. I think it's called money answereth. They say it in answereth. Here we go. Right here. So you got your Ecclesiastes 10:19. That's it right there. All right. So if you all wanted to be challenged on this, saying that you don't need to be dealing with money, well, the biblical principles tell you that you should. And it tells you specifically that money answereth all things. Right. So if you had never seen that in the Bible, we can go to the pastors or to our people around us that are more understanding the Bible more. They'll be able to explain this to us and see what they think about what Ecclesiastes 10:19 is talking about as well. But I can read really well. It doesn't kind of take a big education to read this. It's pretty straightforward. It says, a feast is made for laughter, and wine maketh merry. That means you're supposed to be having some good times too. You're supposed to be having some good feasts and festivities, and even drinking wine at times to make yourself merry. Then it also says, money answereth all things. So obviously, money is involved with your growth of your self, as well as the growth of your family, the growth of your businesses, the growth of everything. So money answereth all things. This is a very important biblical principle that we found as long as we look into this as being lenders. Now let's go to the other biblical principle. It says that the borrower is a slave to the lender. Let me see if we can find that. The borrower, a servant to the lender. That's what it says. Here we go. So that's found here in Proverbs 22:7. So your other biblical principle is telling you that if you remain the borrower on paperwork, we're being very specific. If you remain the borrower on paperwork, you are still in this position here. We don't want you to be the borrower. It says the rich ruleth over the poor, and the borrower is servant to the lender. Right. So that is what that is right here. So you don't want to be the borrower. You would want to be the lender. Right. So that's another biblical principle that we've learned that was found that's dealing with banking principles as well. So you're going to learn how to use yourself as the lender, right? You're the lender. You're not the borrower anymore. You have the money because money answereth all things because you got the cash, you got the money in your hand. So why are we seeing ourselves as the borrower? How are you the borrower if you got the money? Right? Did you not put your sweat equity to grab that cash or to get that money? All right, so you don't want to get into the mind that what you're doing is not enough and that you're not gaining anything because you are the lender. You always start off as the lender. All right, so this will allow you to be a trustee of a revocable living trust. Right? Once you become a lender or a sole provider, SOLE, you will become a trustee of a revocable living trust because that's why a revocable living trust is even activated for you. So you can provide for it. You're the provider. You know, like they say that God is my provider. That's right, because by you working with God, you are now providing. All right, that's the way it works because the way it looks is what it is. So this will allow you to be the trustee of a revocable living trust, which activates your sole proprietor. That activates the sole proprietor, that revocable living trust. Once your bank is activated, you will become a banker and you will also become your own broker. That's a mouthful right there. I'm saying that bank is doing a lot. I mean, that bank is going to be managing all your assets, all your liquidity, right? When we talked about that liquidity, and that liquidity could be over that FDIC. If that liquidity is over that FDIC insurance, this is showing prospectively that you're over the threshold. Now you're instantly able to get over $300,000. All right, so your goal is to get out of that threshold. You want to be over that. You want to be over 250K. That is your goal. Every week, every month until you do it, right? So we all need lines of credit that are at a point that you have, as we said earlier, as your mind begins to accept this, you have to accept that you would want to receive over the threshold that is said to make you the sole proprietor, right? As well as the sole provider. Because you can't be a sole provider to the sole proprietor if you don't have over the threshold. All right, so this is getting to the why you have the bank. This is why everybody is in the private banking course. The private banking course is for you to get to that point. Once your bank is activated, you will become a banker. Actually, as soon as you open the account, you instantly have been a banker. Instantly. As long as you got that card in your hand, you a banker. If you got a bank card and it says business on it, you're a banker. Okay? This is so simple. The United States of America does not complicate stuff for y'all. They gave you your card. They gave you the social card. They already told you that you're a sole provider for yourself. You have securities, sole securities, but you all are using the social. I said use your soul. Stop using the personal side all the time. I'm not saying don't use it at all. Just I'm make sure I'm in what I'm saying about when I say social security benefits, right? You use all the benefits you possibly can, but make sure you activate the sole proprietor side of your social as well. All right. So by operating with this mindset as a sole proprietor, this will enable you to gain unlimited credit. That's it. That's right. Like, what am I doing this for? Why is this so important? Well, what is the trust? What about the trust? Right? Everybody's saying, what about the trust? Like, you can't get to the trust. You got to get to yourself first. Can you have unlimited credit first so we can give the trust unlimited credit? Everybody's all focused on the EIN. That's a document from the IRS. Okay? I mean, that's a document from the IRS. You're not from the IRS. You are just authentically where you are. Where did you come from? Did you come from the IRS? Did you come from the corporation? So this is the mindset. By operating with this mindset as a sole proprietor, this will enable you to gain unlimited credit. But right now, y'all at limited credit right now because they are limiting your credit. They're limiting your credit because you are allowing them to limit your credit because you are applying for $25,000. Like I said earlier, that you all are applying for credit. I don't care if it's an LLC credit. You're still applying for a limited credit. We're not saying that don't get the funds. We're just saying it's limited. But what about you? Why don't you want to be at the point where your sole proprietor is unlimited? Because that's where your unlimited credit is going to get through. All right. So once you have a change, the mindset, once you have a change in the mindset to have $300,000 or more, you would then be able to schedule your business to millions of dollars or more. I like to say scale your business. Once you scale your business to over $1 million or more, then you're in the net worth value that I just mentioned. You're in the high net worth value that we're all eventually, that's for your goal is after you've got the 300K. But for some of us, we still got to get the 300K mindset. You got to be ready for 300K. If you ain't ready for 300K and you can't manage that, then how are you going to manage $1 million? Or we say millions of dollars of assets, such as houses and cars and boats and properties and businesses, whatever that is. Right? If you can't manage 300K, how are you going to manage $1 million? Right? This is after all your bills are paid. So we're not here to say, hey, get the 300K and all the $300,000 just went on all my bills and now I'm broke again. Right. So that's not the mindset either. It's that you're just getting the money just to pay off all your bills and now you're broke. Doesn't make any sense. That's not a business. Right. You're not supposed to think. This mindset has changed you. You have changed your mindset to have $300,000 or more so that you can scale your business to millions of dollars or more. The goal is to become a multimillionaire for your trust, right? That's the reason why, because once you gain these funds, we're going to go into why as time goes. We're going to show you how you're supposed to go ahead and give all these things over, give all things to the trust. You have to pay the trust. Once you have activated the revocable living trust, there's no way to just stay and just pay your bills and just get a check. All right. So that is the mindset to avoid. That is really the killer of your business. That will kill your business by just staying around just to pay your bills, getting by with just enough. Right? That is not the mindset of when you have changed over into the sole proprietor. Lastly, we will go over how you are to create brand new expenses or brand new bills outside of the bills and expenses you are already paying. That's right. So that exactly answers why all the bills that you already paid, you should have added all those things up. We told you with our studies with the what is it, publication 4681. This is coming straight from the IRS. Let me go straight to that again. So we have to show people that made this your first time seeing this. So publication 4681 from the IRS tells you that you should add up all your bills, all your debts, and all your expenses. Coming straight from the Internal Revenue Service. And they're breaking it down. They're saying even if it's canceled debts, that means that you didn't have the money to pay them. The foreclosures, that means that they got you into foreclosure or it's pre-foreclosure. Repossessions, that means your car got repossessed or something is in the process of getting possibly repossessed, because if you miss a payment, that means it can be repossessed. And abandonments, that means that you've abandoned things such as you had to leave, such as an eviction. An eviction is seen as an abandonment or an ejectment. These are different things you all have to consider, as the IRS has already given you the remedies to know you should add all those things up. Everything that you thought of and that you couldn't think of that you owe, you're supposed to put in listed. And look, they updated it to 2024. So let's view this for a moment just to prove and show how this looks to do in real time. So let's go to publication 468. Let me just type it in and go to the PDF right here. Okay, so this is it. And you're going to click on this PDF. And when you download this PDF, you're going to go to a specific page that Iris gives you as a worksheet. So as you scroll through this, you got to look for it. Here we go. This is it right here. This is the part that you all are on as you get through adding up all your debts, all your expenses, and everything that you have as bills, expenses, everything that you would say you owe. They're called liabilities. Another word for that is called liabilities, right? Rich dad, poor dad. Some of our people who are in the entrepreneur realm, who are already in the realm, you already know what I'm saying. Liabilities. Assets over liabilities. You don't want liabilities to be over your assets. All right, so liabilities. These are all liabilities that are listed. As you can see, the IRS has listed everything that you have as a regular life. Most of the time is a liability. That means credit card debt. Believe it or not, it doesn't matter if you have a $50,000 line of credit and it's unsecured. This is a liability. Mortgages are liabilities. Believe it or not, they are not helping you. The mortgages are hurting you. They are liabilities. Cars, that's right. So if you own a car, the car is in your name, or you got a vehicle loan, it's a liability. Medical bills, liability. That means that you didn't have the insurance at the time, you didn't update your social security insurance, and you had to pay out of pocket. So now you owe medical bills. Student loans, liabilities. That's right. You had to get your education. That's right. You had to focus on how you can educate yourself. Accrued or past due mortgage interest. That means all your past due mortgage interest, accrued or past due real estate taxes, accrued or past due utilities. That means all your utility bills are liabilities. Your water bill, your gas bill, your electric bill. Accrued or past due child care costs. That means that you're sitting at the house taking care of your babies, or you got children, you got youth that you ain't taking care of. It's still a past due child care cost for you. Whether you do it or not, it's still a cost. Somebody's going to do it. So that's why they call it child support. That's why the state will then come in and they will create a child support program. So that's what this is. Past due child support costs. Let's just keep it simple for y'all who want to make sure you see it because it says it right there. But y'all don't want to listen. Y'all don't want to put this on your tax return. You want to keep going by every year thinking that it's just going to go away. It's not going to go away. And that's even if you did, even if you don't have child support, you still have accrued balances for taking care of your youth. And we're going to get into details how the household is designed for the beneficiaries, not for the trustees or the people who just paying the bills. Next, you got your federal or state income taxes. That means that y'all owe money on your federal or state income taxes right here for the past years that you didn't file or you didn't pay. It's right here on number 10. So the IRS said that you were supposed to add that there too as a liability. You got your judgments, all your court cases, all your court case judgments. That means every court case you ever had, and there's a judgment, and they say you owe money. That is here also. So that means court cases are also listed that you should have added there as a what they call a liability. Business debts. That's right. All your LLCs, you add them all together, and your sole proprietor. All right. So if you got the sole proprietor EIN or the partnership EIN, those are business debts. So you have to add all those debts together. That's still included as a liability. Margin debt on stocks or debt to purchase or secured by investment assets other than real property. Those are liabilities. That's your stock market that y'all using with Forex. That's right. Forex is a liability to you at times. It can be. That means if you want to stick in the stock market, you don't know what you're doing, it can become a liability. And other liabilities that we don't know that's not listed, the IRS is also telling you to list that as well. So I went through that slowly just to prove that you all should already know what you should have as a liability. These are the things that you want to list as being able to know all the bills that you already have and expenses that you are already paying. And now we need you to create brand new expenses and brand new bills outside of those. So yes, you need to go to the car lot and get a bill for a brand new car so that you can begin to see how to add up to the amount that you need to have over the threshold. You got to go look for houses that are higher. You got to look for assets that are higher in value. That is how you become a high net worth individual. Right? This is how you buy property. This is the same thing. Real estate is another way this works. This will allow you to always update your life to be in the mindset of a bank owner. That's right. So that is the end of our main announcements we have for today. And what our goal was today is to prove to you that you're a banker, and a broker. And the way you think like this is, if you can begin to think like this, you will begin to get more results on a weekly basis for your trust. We say you have a living revocable trust, but you have to make sure that you're doing good as well. So your trust can be doing good, but you also have to be doing good too. And they have a lot of confusion with putting something before yourself. It says you must, what I think they say, a biblical principle, love your neighbor as you love yourself. Right? So why don't you just love yourself as you love your neighbor? That's the way I flip it. I say love yourself as you love your neighbor. Because a lot of y'all putting yourself last all the time. You ain't loving yourself. So that's a violation of your business. So now you're putting your business last. Right. So I'm gonna put myself last. I'm gonna put my business last. That's right. No, that doesn't make any sense. You're supposed to put yourself first. And they're gonna tell you in the corporation world you're being selfish. You need to be out here helping us with our business first. And that's why it seems like an opposite mindset. You see, because this is an entrepreneur. You're now a high net worth individual. You're an entrepreneur because you're instantly becoming an entrepreneur because you want to be a owner of a bank. Right? And this is the way this looks. This is a bank owner. Your name that is on the social security card is a bank. Right? The name. Then they also got a number right there for you too. So these are the layers that we have to see this from. And I'm going to see this from the perspective that most people may not understand it, but I'm going to show you how it works. You got your social security card. That's how this whole thing began, right? John Smith. You see all these social security cards. This is how this whole thing starts. How are you going to get your line of credit without your social security card? You see, that's what they do. They always run your social. But this time you're supposed to run your own social. So how do I do that? Let's get into an example. I'm going to show you in real time how I did mine since we're almost at the end. I'll give you all this last part of the discussion. Went through all the announcements. I'm going to show you a real time example of how this looks for you if you had to do the same things that I did. Now, I think I did this on another call, but I'm going to do this one, for example, on Bank of America. So some of us may not have been able to successfully open the Bank of America, but I'm going to show you all today how Bank of America is an account that you want to open for your sole proprietor. And if you can't do it online, then you can do it in person as long as you have your documents. And those three documents we went over is your assumed name. We say you can use the assumed name. If you're going to walk in, they're going to ask you for the one that's in your state. So you're not going to be able to get around that one if you walk in and it's in your state. If you do it online, you can do the assumed name certificate from Minnesota. It does work if you do it online. And all you need is your social security card, your driver's license, and assumed name from Minnesota. It usually works. All right, so I'm gonna give you all just a small example. I didn't have too much funds to show, so I can show myself as the example and not make it a big deal, right? So I'm here in the Bank of America account showing you all the back office terminal of a sole proprietor. So this once again is showing you that my name is the sole proprietor. I have my name up here. This is not a personal bank account because you do see at the top it says Business Advantage 360. So as you can see, this is a business at the top. So if you don't see business at the top, this is not a business account. So Bank of America has the business side to my social. And you see, they look at that. Bank of America deposits produce FDIC insured, backed by the full faith and credit of the United States government. So they already telling me like, hey man, if you choose to put over $250,000, then you know you may not have that covered. So just be sure to understand this is how we look at this. All right. Now, as you can see, it says business services. So Bank of America does talk to me differently because I'm looking at it from a business perspective. So they actually offer me business services. And they're great too. I'm seeing some good options they actually have available. I can actually send invoices right from my sole proprietor. I can do a lot of stuff right from Bank of America. But just for today, I'm going to go and show and prove to you all how you are no longer supposed to be thinking about your personal credit score. And I'll close with that this week to kind of prove and debunk the whole personal credit score that everybody's trying to get a higher credit score. And then next week, I'll get into how you can just use the trust in a 1041 to gain a line of credit next week. But this week is all about the sole proprietor social security number and how you're supposed to have money on that first. So this is the first things first, as you can see, and I'm using it in real time. So let me show you all some of the business services that they have available. And the one that I want to show you today is going to deal with the business credit scores. Look at that right here. So under tools and investing, I'm going to go right here. Look at it, goes into my net worth. So once I get my Bank of America, you all probably will never show that on the screen. Once I get to that point, it'll show all your net worth right here. But this is where you will be able to maintain all those assets right here. Once it hits over 250,000, you then have to move those assets into a specific way of securitization, which I'll give you all a sneak peek today. So it also can show business credit scores, which I'm going to click on to prove to you what I was saying earlier, that you have your Dunn's number. Look at this. It shows I have a Dunn's number. I didn't even do anything with this stuff yet. So I need to build my Dunn's number so they instantly show me I have a Dunn side to my social. I need to get over here. I need to get to the low risk. I need to get to the part where I'm all green, 580 to 670. So these scores look totally different to the business side, right? So the bank is not going to run my social. I'm just trying to show you all how I do not have to use my social security number to get access to credit. All right, so that's my goal right here. I'm going to get to the 580 to 670, which I think my score should go up because I did some good stuff this last month. Should be able to get my Paydex score up or my predictor. As you can see, my financial exchange score is a lot better. Want to get to the low, moderate, and the low risk, the 900s over here. As you can see, they got me at 876. That's pretty good. So I'm almost moving over to the low, moderate risk category. And once again, this is my social. This is not connected to a EIN. Right. So very specifically saying this is not connected to an EIN and it is powered by Duns and Bradstreet. So yes, Bank of America has exclusively made a deal to connect their accounts on the business side with the Duns and Bradstreet. So this is proven space to show you all this is a high level of knowing how to operate your revocable living trust. Because once I have this sole proprietor, the way I have it ready to receive is going to get me ready to move the funds over to my trust, which I'll get into as we go. But you all have to be ready to receive. If you're not ready to receive, then this is going to be your holdup. So as you can see, tools in investing is how you get to your business scores. And as you begin to learn how to do this, you want to learn how to get access to more credit. So that's what I was telling you all on the sole proprietor side, how you would eventually learn how to get a secured credit. So they have this available to you through business services, I believe. I think you can do this on some. Let me see what part it's on. Open an account. Is it here? Tools and investing, business services. Let's see if I can find it. Now, I know there's a part where you should be able to open up a line of credit. Look at that. They even have Zelle for your business side. So you're able to use Zelle. Look at this. You got vendors sending your invoicing, which I'll get into more details as you guys begin to learn how to operate your sole proprietor, because a sole proprietor is the most leastly operated business from people in the world. Like most people never operate themselves. They're operating everything else except themselves. And this is why I adamantly work on this, because this is a motivation for me to work on this week in, week out, because I'm able to work on myself. Now, so for I guess it doesn't allow you to do it this way when I'm already logged in. So I think I only can open an account. I don't think that allows me to apply for a credit card account. Okay, I think it does. Look at this. I thought wrong. So even as I'm logged into my sole proprietor, this will be the way that I was showing you all to get the business secured line of credit. So I'll show you how this looks as well. So as you can see, look, they have the business credit cards. So get out of the personal credit card side and get into the business credit card side. That's what I was saying with Bank of America. So even if you already have Bank of America, this is a lot easier for you because you can just simply convert yourself into the sole proprietor. So let's say I got started. And what kind of business credit card are you interested in? Since I know the answer, I'm going to show you the answers to build or strengthen business credit. That's what my goal is. And I want them to share my offers. All right, here we go. So look at that. Instantly, Bank of America says Business Advantage Unlimited. Cash Rewards MasterCard. So why would they say unlimited? That goes back into my diagram earlier that you always see, okay, what is Brother Wallace talking about unlimited credit? What you mean? So let's go back to what I was saying about unlimited credit. Okay, so the unlimited credit side of yourself is where you're going to gain um, right here, the proprietor. So by operating with this mindset as a sole proprietor, this will enable you to gain unlimited credit. Here we go. This is what it says. So unlimited credit is what you're gaining from yourself. You're not gaining credit from anyone else. You're gaining your own credit. So this makes it unlimited cash rewards MasterCard secured credit card right here. They clearly say secured. So you want to make sure you do the right thing to get started with yourself. So you're going to build your business credit. And this is how I would do this if I were to apply. There are restrictions. So if you all read the instructions, firstly, you got to have the account open first. You got to have a secure, not secure, I'm sorry, a sole proprietor account already open. You got to have a savings account already open. And then they also show that you need to have a minimum $1,000 deposit. All right, so this is a little different. If you're not ready for this, then don't start this if you know you don't have the $1,000. That's why we say the bank is optional. You do not have to go to these bank partners like Bank of America or any of these places until you've mastered, the funds that you can have for yourself first, right? So I say if you have, got to the point where you have your bills and you want to get to the part where you can pay your bills, I would say at least $1,000 to $3,000 is where most people should start off with your secure line of credit. So this is it. I just wanted to show you where this is all coming from. This is how this will look for me. And they would tell me all the details that I would do to move forward. How I would go forward. As you can see, they pre-fill out the application for me. They gave my federal tax ID is not necessary because it's going to be in my social. And Bank of America has a good way of getting you all the answers filled out because I've already done this application through my sole proprietor. So they've already opened up the account. So they're more likely going to approve me this way than if I were to just blankly try to apply for the secured credit card. So I just wanted to prove like how this will look from my perspective. For some of us may not get approved for some of these things, but this is how you can guarantee your approval, more than likely. But some of us may have typed something we didn't know. So just be sure to understand that this is a process that you have to learn as you go, because you are your own banker now. You are your own banker. See, right here. Let's go into the terms and conditions to say and prove that this is merging your individual side with your business side. By submitting an application, I acknowledge and agree on behalf of the business entity and myself as the owner, authorized officer, that all information provided in connection with this application is correct, that the business entity and I personally, in my individual capacity, will each be liable for all charges, fees, and finance charges on all the cards and accounts issued pursuant to the request of any future requests to add additional cards or accounts. That on behalf of the business entity and myself, I grant security interest and contractual right of offset in into all deposit accounts now and hereafter maintained by the business entity and or me with Bank of America or any of its affiliates to satisfy all liabilities incurred under the business card agreement. So I like how they write this out. I'm not going to read through all the details, but you do see the APR 27.49%. So that's 28% per year. They think it's for cash advances, it's 28.49. And they basically, this is what they're going to get out of you using them as a business partner. So they get 28%, you get the rest. This is how this looks when you're doing business with these banks. So the whole perspective changes now. You're actually creating the bank as a business partner. Once you get this type of card, you're creating them as a business partner. Yep, you can cash advance. They're just gonna charge you 4%. So you can't get all your cash. Let's say I put $1,000 in. Then I gotta get 4% of the $1,000 back. Right. So I can get all the $1,000 back the same day, but the bank is my partner now, so I gotta give them their cut because they doing business with me. This is how this looks. So let me go into any comments, questions, or shares. We're at our close of the meeting for this week. I'll go into the YouTube chat as well. Want to make sure that we've been thoroughly able to see how these banking strategies and techniques are working and how we can see this work in perspectives of each other. I'm only showing you all one example. There are multiple examples of other ways of banks that will do this because banks are um, the first step of our social, right? So the social security number, this is the beginning of accessing, which we call your social credit. But some of us have not accessed our real credit yet. This is your true credit right here. Once you access this credit right here, this will open up true credit. Like security agreement, disclosure for fully secured credit cards. So I'm giving you all the answer today of how you are able to securitize. Notice that they didn't say there is a limit to the amount that you can do. They just told you the minimum. They said the minimum is $1,000. So if I had over 250K and I had to put money into something, I'm going to place, as I'm going through this answer for you all who have stayed and listened to this part, I would then securitize these funds into this. And then I'll be able to create a secured loan over time as well. So I'm going to create a secured account that's going to also turn into some type of loan. So I'll become the lender. So then I'll be able to lend as a sole proprietor to the trust or to other entities or other trusts as well. So just read through this information thoroughly. Make sure you know that there are levels and steps to doing this and know that the way it works is guaranteed. So I'm going to exit without saving. As you can see, I'm still in my terminal of my sole proprietor. And this is the way this will look as your back office to your sole proprietor. Now I'm just showing you all just this for today. This kind of give you a Bank of America example. Bank of America is the easiest one so far I've been able to find to explain. Plus, it's a known bank all over the world. There's Banks of America everywhere. So if you were in other countries and you wanted to do this information, I'm already working with people in United Kingdom right now. We got some people in India, and we're also focusing on working with a few people in Africa as well, which we know in Ethiopia and Ghana. So our goals as well is to see where all these banks are located. So I'll go through that before we close out today as well, and be able to answer a few more questions if there was any questions in there. But let me go on, pull up a locator map or a finder for all the banks of America around the world. Quite sure they have some Banks of America in China as well. We got some Banks of America. All right, let me see if there's any that's not there. All right. All right, so Bank of America. So here we go. So this is your main page. So I went over this in the past. I talked about Bank of America, how you know you're on the right side of the bank or the business side is you got to make sure it's on small business. If you're on this page right here that says personal and you're logged in, this is the wrong side of, actually, it doesn't even let me go to the personal side. So it actually blocks me. So I've been logging in on the business side so much it doesn't even let me go to the personal side. But the goal is always make sure you stay on the small business. You will see that it says this, and most of your cards that they offer should say business advantage. This is how you know for sure this is the business side. All right, so let's go into some international locations of where Bank of America could be located. So let's see if they give us this on the bottom of their website. Here we go, locations. So let's say I wanted to go to Bank of America in Europe. Let me see Europe. See if it pops up. Okay, let's say 100 miles. So I can't use this. It's another Bank of America website. I noticed I forgot about that. Here we go. So you got your Bank of America International. It said find an international partner. Let me go back to that screen. Okay. So traveling internationally, use your Bank of America ATM or debit card at one of our international partner ATMs and avoid the non-Bank of America ATM $5 usage fee. There we go. Okay. So Barclays, United Kingdom. Okay. So they have one in England, Scotland, Wales, Northern Ireland, Jersey, Guernsey, and the Channel Islands. They have one in France. They have Banca Nazionale del Lavoro in Italy. They have the Duste Bank in Germany. They have the Urkis Bank in Ukraine, the Tev Bank in Turkey. Okay, they have the Bank of America in Canada, Mexico, Peru, Chile, the Caribbean countries, the Bahamas, Barbados, Cayman Islands, Dominican Republic, Jamaica, Trinidad and Tobago, and Turks and the Caicos Islands. Got your Bank of America in Australia and New Zealand. And we have the mainland China, excluding Hong Kong. So we have the China Construction Bank. So there we go. So we're seeing on an international level where people in all these other locations, let's say if you were to create a sole proprietor and you were in any of these locations internationally, if you're watching this, then you also can access a sole proprietor as well. So let's say you're in England. We can help you with a sole proprietor in England. All right, so you'll be able to go through these types of layers with your bank cards in America and traverse all over internationally to these other locations. But I hope that helps with understanding how the bank works. You are the bank, the banker, and the broker. This is what includes your management as well as dealing with funds or money and cash. As we say, these are your liquid assets. This is liquidity. So anything that you have that's on hand or that's available for which we call value, this is called liquid assets. And the value at times could be businesses. Let's say your business has clientele. This is an asset. This is also showing liquidity or cash flow. If you have funds coming in from jobs or working, this is liquidity. This is showing that no matter what, we know your check is coming in from working with an employer or a partner. Remember, those are no longer employers anymore. Those are partners because your trust EIN is supposed to be your employer. So your revocable living trust is your employer, right? And your sole proprietor works for this revocable living trust. Then after that, you're able to go out and work with the corporations, such as United States Corporation and all the different entities they authorize to work with you, such as businesses that are registered. That is the order of operations. You're supposed to pay yourself, then you're supposed to pay your trust, and then you're supposed to pay your bills. Your bills are the last thing you're supposed to pay. But they have it backwards, y'all. They got y'all paying your bills first. I'm sorry, paying your bills first, uh, paying the corporation, and you paying yourself. You actually not even paying yourself. We actually probably not even have enough money left over to pay ourselves. This is why this isn't working. You should almost run out of money almost before you can pay your bills because you've already paid almost all this stuff to yourself, which is your sole proprietor. Now, this is very in depth to show how the cycle of funds can go through you. And then once you have the funds with you, you will always be able to lend those funds because they'll be coming from you, right? So even if it goes to another um, biller, this is coming from the sole proprietor now. And not only if you give the funds to your revocable living trust, this is you funding the trust now. So everything is starting with you. You're the origin of all things. This is where everything began. As we talked about in our calls before about your sole funds, is your sole proprietor as well. You also have your soul, such as your feet, the soul of your feet, which we know it gets deep when we say that the young baby or the young infant, which are all corporation terms. Remember, it's only one well, sorry, it's only two answers that can be whenever there's someone being born, right? So you're either a son or a daughter. What they're gonna do is say that you're a baby boy or a baby girl. These are all terms that you have to avoid because if you begin to think like this is going to take you back into the corporation in the way they have named or giving you a, which they call a fund. And they call it a corporate trust fund. Your goal is to get out of the corporate trust fund. You want to get to your sole trust fund, which is a sole proprietor. That is the trust fund that is already activated, but you have not activated your sole proprietor. The corporation has always been running. This is how they're able to pay for all this stuff because they're using you. So this isn't something that you can break down in a day or you can solve in a month. This is ongoing. As long as you're working on this, it's going to work itself out. But if you're just sitting back waiting for something, a lot of these things are going to escape you. They're not here for something for you to sit on. You want to work on this every week. That's why we call these strategy calls. These are all strategies, techniques, methods, and applications. So you want to apply the knowledge. You don't want to just have a whole bunch of knowledge. You don't want to just know a whole bunch of stuff, but you're not applying the stuff that you know. It's not going to get you anywhere. It's just like football. You can do all the drills. You can do everything in practice, but it doesn't matter until you're in the game and you actually catch the ball. And then when you catch the ball, you still got to get in the end zone. So that's what y'all should be doing. You should be getting in the goal, getting in the end zone so you can get paid. What's wrong with you getting your funds and getting a line of credit approved from a bank? Any of y'all get $5,000, $10,000 tomorrow, you're going to be great because that's going to be more funds that you had access to through your business account or your business sole proprietor than from your personal side. Because we know if you get on the personal side, you're going to be personally liable. And more than likely, you get nothing. You can't even write it off. When have you ever been able to write off a personal loan or a personal payday loan or a personal credit card? You can't. But if you had a credit card on your sole proprietor or you had got a loan through your sole proprietor, this is actually going to help you gain more credit, right? This is the way this looks. So if you're seeing, oh, what do I do this week? Well, apply for $5,000. Apply for $5,000. That's the something that everybody at this point should have access to at least. So you can pay off all this stuff that you all have on a month to month basis. Most of us don't have bills that's more than $3,000 to $5,000. You should be able to pay off all your monthly bills with about $5,000 or less. And we're talking about your utility bill, how much of your mortgage is or your rent. You got gas. Basically, add all that stuff up. Add up the prioritized things. As we say, this is something that you need to know on a month to month base. So I know mine is at about close to 3K or over 4K. It could be more than that. I think mine is all the way at this point. It's a little bit up to about 5. That if I had to survive, I can get through month to month by making the bare minimum payment of at least on everything and paying it off every month. This is the way you have to get to that point, is making sure that you're not just getting a paycheck and all of your cash is instantly going to the bills. You should have a line of credit that pays the bills, and the money that you have coming in makes payments on whatever you owe. So now you're paying yourself because you're paying your sole proprietor, you're paying your secured credit card, and now it looks better because your credit is building, you're paying your bills, and you have a flow of cash coming in. So I can say this, I can talk about this all day because I'm doing it and I see it works and I see other people can do this as well. As long as you begin to see yourself and all your bills as working for you. And this is the way this works for me. But if you have any thoughts on this, just make sure you all ask the hard questions on the bank because I have a lot of questions that people ask about the bank. And I always tell you, you can't get to the 1099B until you all have mastered this part where you have learned how to pay yourself. So a 1099B is you bartering and exchanging cash. And the 1099B is just something the IRS likes to use to measure to determine that. And that's usually something that you offer like a service or a product, a trade, a skill, an art, a craft. These are things that you want to be able to monetize. Monetize your art, monetize your crafts, monetize your skills, monetize your trades, right? What's the problem? You all have multiple things that you can make money in that format today. Everybody has a gift. So this is important for us to see the sole proprietor as the beginning because you all can work on the EINs and the corporations all day, but then you're forgetting about yourself. You have to pay yourself. So all in all, this is all I have this week. If we need to work on things, I had a question that came in about PayPal. So I'm going to go into that question last because that's going to be next week. We're going to talk about how you should be able to use the 1041 exclusively to get approved through PayPal. So we've had some results with that recently. We've had some recent results within the last 60 days that PayPal will approve you as well for a business loan. And this is without any what they call, they still need your social because you're the trustee. So this will be without, which we say, any type of documents. So you don't need to run credit scores. They don't need to run your social credit score or anything. They're just going to do it just right off of your PayPal business account, your sole proprietor PayPal business account. Right. So somebody asked the question, would PayPal business credit be considered a viable operating option? Short answer is yes, absolutely, because it's worked out. And I'm going to show on the screen what PayPal says so I can give that answer more directly. That'll give us a segue into going to next week. And next week, I'll be talking about how you all should be using the trust EIN for PayPal, but you should be using your social for all these other banks and credit unions. The banks and credit unions, you want to use your social. If you want to use when you want to use your trust EIN, you want to use PayPal. And I found another one I'm going to work on too. I'm going to get approved as well, and that's going to be with Square Business. So it's called PayPal Working Capital. PayPal Working Capital, and I want to click right on their webpage because this may be a secret to a lot of people because they didn't know that if you had a PayPal business account, this is really where you should be starting at if you have never even had a bank before. So as you can see, PayPal is going to get you above that threshold that I was telling you about. Once you learn how to do this, this will be something you can build up. And it says fast funds with payments that will flex your PayPal sales. Let me scroll in and show you how they already know. It says the PayPal working capital business loan is, see, it's a business loan. It's primarily based on your PayPal account history. That's right. So that means the longer you had that PayPal business account open, like we instructed people in our banking course, once you take our banking course, we walk you through the PayPal sole proprietor account. We also walk you through the sole proprietor account of banks. But you gotta create your account to be correctly updated. You're gonna apply for $1,000 to $200,000 and up to 300K. So here we go. So that's back to what I was saying, that the goal is 300K. Now, if you're not ready for 300K, then it's fleeting. It's gonna leave you because they're just gonna give you the money, and you're not gonna be ready for it because they're telling you that you can get up to $300,000 just approved off of a business loan. And this is for repeat borrowers with no what credit check. So they make it specifically sure that you see for sure no credit check. It says if approved, loans are funded in minutes. That means it's instantly going to show up. I did see in real time that it worked out for me as well, that I was instantly approved through the trust. And I'm also working on a couple of the trusts. So I'm still working in that process. So I'll give you all some more results in the next few months as I begin to work with this. But we do see some results from this from the beginning of this year up to this point now. Now we do see that it depends on your history. They may start you at 1,000, or they may start you with more. It depends. But you see the $1,000 keeps popping up for secure. Remember, I was telling you I'll get that secure line of credit. Maybe PayPal will understand that looking at your portfolio or looking at your social, they may find that secured credit. So I don't think they run your credit, but I think they see if your business is set up in the system somewhere. So the way you get their credit, they don't check anything. They just want you to log in to PayPal and then you just apply at that point, right? So you would then apply directly through PayPal. So there is no other way to get the funds. You can't go to Bank of America. You can't go to Chase. You can't go to other banks. They simply tell you all the answers here. What materials do I need to apply? For many merchants, all you need is basic information and your business and yourself as an authorized representative on the account. So you have to be the authorized representative. That is very important that you see how to do that. It says PayPal working capital is currently unavailable to businesses located in North Dakota, South Dakota. Please continue to check back to see if PayPal working capital becomes available in your state. Okay, so it's not available in North Dakota and South Dakota. Interesting. Is it available outside United States? Yes. You see, PayPal working capital is available in United Kingdom, the Netherlands, France, Australia, and Germany. So this is something that's worldwide. That's why I'm saying the sole proprietor is not something that's just here in the United States. This is, international as well. Can I get one more capital loan at a time? That's issue one at a time. So you're gonna get one at a time. So if you have a different PayPal account, I'm quite sure you probably can get access to another line of credit if it's a different PayPal account. Will my credit score be affected if I apply or use PayPal working capital? Here we go. So this is the one I wanted to get to, and the answer is no. So that means this goes back to what I was proving you all, how your credit score isn't being seen. They're probably looking at this Dunn's number, and they're looking at the business side to see if you all have your social on the business side. Now, they may not even look at that. They may be looking at the EIN to see if the EIN is registered correctly in the system so they can see if that's ready to go as well. But you see, the lender determines your eligibility based on your business's PayPal sales history, not your business or personal credit score. Here we go. So I even thought they were using the business score, but I've been corrected as well. They say they're not even using the business credit score. They're using the PayPal sales history. So that goes back to paying yourself. So if I had a PayPal account, all I have to do is keep paying myself $100 to make it, look whatever way it needs to look for the sales history, then I'm going to do whatever it takes to get access to this type of capital, right? So apply for or using this loan won't impact either credit score. Wow. Very interesting. So we got some go-tos for this next coming explanations. Will show how you're supposed to create a trust, and this trust is supposed to be matched with a PayPal account, which is more different than a bank, right? So the bank, we say, utilize the sole proprietor, right? When you use the bank, use the social, right? Use the social. This would be the first layer of opening up this Bank of America account or a bank account. But as you get into the trust EIN, use the trust EIN to open up. Use PayPal for the trust EIN. Right. So this is something that we've been saying through our banking course, but it's hard to get people to stay focused because when you start dealing with money, money gets a little personal because most of us have our funds personally utilized, which our goal is to get out of the personal utilization of money and begin to use this as businesses, begin to lend money to ourselves and to give ourselves the money, because we're not giving ourselves the money. We're giving the money to the corporations first. You have to give the money to yourself first, then you can pay your bills. All right. So I hope this helps. Thank you all for your time and your efforts. Does anybody have questions, comments, or shares? I'll be sure to answer that. If you all will be able to type that into the chat, or if you all want to unmute your mic, feel free. The mic is open for anybody to speak as you will.
Yes. Good evening, Brother Wallace. This is 100 Eyes. I had a question in regards to the sole account. I know when we for those who have the sole account at the end of the year, if we have an overage of money in our sole account, I know you had advised to pull that money out. But when we open up or when we are authorized to receive the secured credit card, and when you said to whatever money that you have coming in to put that in that up to 250,000, let's just say at the end of the year, you're able to put, let's just say $70,000 in that secured card. At the end of the year, do we need to pull that money out if we don't use it all, as far as like if all of our bills are paid by the month of December and we still have an overage of let's just say 15,000? Do we need to pull that money out of that secured card if there's an overage, the same way we would have to do if we had an overage for our sole account, whether it's in our savings or checking account? Do we have to pull that? And that's my question. I'll land my plane.
Great. That's a great question. And just to kind of go into the short answer is no. if it's just, this is where we went into our example, that is your securitization. Once you have, even if you, it doesn't matter how much you put in there. If it's money in that, it's been securitized. It is protected. So if I have $400,000 in a secured credit card, that is a securitized um, fund, meaning that it can't be touched. So this is examples of how we're able to create securities, and the bank can't even move it because the bank is protecting it as well. It's in a way, it's almost like an insurance fund. You're creating your own insurance fund. So short answer is no. The only thing you want to move at the end of the year is any money that's sitting on a debit card, right? If it's on the savings, it's still good too. You know, the savings account is still good. So we're not saying get it off the savings either. We're saying get it off the checking account. So if it's on the checking account or the debit card and all our money is sitting on checking and debit right now, this is what's happening, you all. This is what's happening. So don't leave it on the checking, as well as leave it on the debit card side. And I hope that answers that should answer the question for Brother 100 Eyes. Any other questions, or anybody else have any comments, questions, anything like that? So let's get into that. Why don't I leave money on my checking account? Because if the IRS can take it, that means it's not secure. It's just that simple. If the IRS can take it, it's not secure. All right? That's your homework. How do I make sure the IRS can't take my stuff? And it's a lot more answers than trust, because people just say trust. There's a little bit more details to that. You got to move things into the trust. You got to move things out of, which they say, the corporation side. And that's a lot of us working into that mind right now. So I hope this helps with answers and questions. Everyone that is able to go into this, make sure that you are practicing these things. Make sure that you're applying them. Don't just sit with a whole bunch of knowledge and get confused and say, I don't know where to start. This isn't where you just jump onto multiple things at one time. Work on one thing at a time. Today, some of us may need to accept more money. This may be all you need to work on all week. How can I get my mind to accept $300,000? It took me about I ain't gonna lie, it took me a while. It took me about a year. What? 300,000? I'm just not trying to get 50,000. But you all got to start thinking like, yeah, what if PayPal approved you? And like I say, that thing can happen. You don't know what's gonna happen. You could get approved for 100,000. You don't even know. Now you sitting with $100,000 on your account. What are you gonna do? Right? These are different dilemmas and scenarios we should place ourselves in. Place yourself in a good business loan scenario. And then once you're approved, you should have all the action steps of how you're going to use the money. And this works the exact same way when you get your tax returns. We're going to have a call. We'll talk especially how you're supposed to use your tax returns for your secured credit as well. That should be increasing your secured credit, actually. We'll get into how every year, if you all have done this method correctly, where you put all your bills, all your expenses, and all your debts into a secured credit card, this should pay all your bills, your debts, and expenses, and then you should be able to increase that line of credit every year. It should go up. You should have $100,000 if you are already at 80,000, right? Because you're going to increase that line of credit. So these are the things that we want to work on. If we begin to think, how can I get more, as we say, more lines of credit, which we say more money. But this time, this isn't unsecured. This isn't you grabbing a loan and being a borrower, right? This isn't you grabbing a loan to be just a borrower. You're actually now a business. You're a bank. You're actually receiving funds. You're receiving more funds, right? You're getting more payments. You're paying yourself, right? You're getting things done. Absolutely. So that's how this looks. It may look hard, but you can do it. And you got to be humble too, because sometimes you only gonna have $2 in your bank account because you've put all your money into your secured credit card and you can't just take the money out. So just get used to not having too much money sitting on your checking account. Feel like it's gonna look like you broke. Just to be honest with you, it's gonna look like you broke, but you're gonna have so much line of credit that you know that you're not broke. As long as you know you ain't broke, that's all that matters. But I'll let you all go. Thank you all for your time, your efforts, and your understandings. We all like to do these calls to be transparent as possible. I like to say the sole proprietor is everyone's first step. Begin to look into those notes that I gave you all today, and I'll go back over that as a close, just to kind of go into our next things that we should be looking into, as we've seen that our sole proprietor is your access to the unlimited credit. This is how you gain unlimited credit. As you say, you gain your soul. So once you gain your soul, you gain unlimited credit. You don't want to gain an LLC. Why would you want your LLC to have $1 million? Okay, I'm being so specific. Why would you want a corporation to have $1 million? Wouldn't you want your sole proprietor to have $1 million? And I'm not talking about the EIN. I'm speaking of the social security number. Why isn't the social security number with a whole bunch of money? Why ain't your social security number got some money? So once you change the mindset, you're going to have the money that you need. You should never be broke again once you have these trusts. But I'll let y'all go. Thank you all for your time. We'll continue to talk and speak and motivate each other as much as possible. Continue to work, and we'll be